With the layoffs and foreclosures spiraling out of control, the suffering is increasing each day.
Where are you going to go now?
I don't know.
There are allegations that some captains of the financial industry knew all along a collapse was inevitable, but still continued to take advantage of the profits. Now, as taxpayers are funding a massive bailout, the public is demanding accountability.
I think the entire industry shares some of that responsibility, and for that we are sorry for it.
But regardless of whether they made millions, was there anyone in the financial world who could answer the question, what was everybody thinking? It turns out there was.
Did you see this coming?
Yes.
Karen Weaver is one of the top analysts at Deutsche Bank, a major player in the mortgage investment business. She says in April 2005, she left the confines of Wall Street and traveled to California to get some answers. She's now credited as being one of the first to figure out what was behind all those mortgages.
It was the first peek behind the green curtain, if you will, sort of, to how these mortgages are being underwritten.
Her mission? To meet in person with the people approving the loans that were being folded into investments. What she found stunned her. Underwriters who did not seem worried about issuing risky loans.
What was disconcerting was it meant that they weren't really vouching for the fact that they were creating a loan that they felt was creditworthy.
She says some underwriters reasoned that before a loan defaulted, a borrower could just refinance and pay it off with yet another risky loan.
They were saying that essentially the problem was going to roll off down the line.
So it was sort of like playing hot potato.
One could argue, yes.
And that risky loan is gone. He's into a different loan, and that's not our problem.
That's exactly right.
In other words, she believed lenders were just putting off the inevitable day of reckoning, though she didn't know just how bad it would get. So in September 2005, her group at Deutsche Bank issued this report predicting subprime mortgage losses will increase significantly and recommending that investors bet against the mortgage market. But she wasn't the only person to see what was happening. James LaLiberty was the chief operating officer at People's Choice Home Loan. He has never spoken publicly before.
And how much did you buy this for?
$135,000.
It was his company that loaned Dolores Parker Jackson nearly $300,000, even though she was basically broke. And with so many loans like that, he admits he knew a crisis was on the horizon. And he even asked Wall Street bankers about it.
The answer was, well, a lot of us see this problem coming. We just don't know what we're going to do.
So let's just ride it as long as we can.
Don't kill the goose that laid the golden egg. The income has to fit.
And listen to what this 15-year veteran of the industry and ultimately a chief operating officer says about his own company.
The reputation of the company was that it was a fraud factory.
A fraud factory?
It was very spotty. The chief appraiser once said, fraud is what we do.
Fraud is what we do?
Fraud is what we do. That's how we got where we are today.
He acknowledges People's Choice was more conservative than a lot of subprime lenders, but says it shared many of the industry's problems, especially those stated income loans, where borrowers didn't have to prove how much they made. How bad was it? He showed us a list of thousands of People's Choice stated income loans, totaling more than $2 billion. He says many were risky, some possibly fraudulent. Example, a massage therapist claimed an income of $15,000 a month, $180,000 a year.
What are the odds, in your opinion, that this massage therapist really makes $15,000 a month?
Well, in my opinion, it would be none.
But People's Choice gave him two loans totaling $640,000. For a carpenter, the income listed was $12,700 a month, more than $150,000 a year. And a house cleaner, $11,500. LaLiberty says he showed the list to the staff members as a training tool so they could see the kinds of loans they needed to stop issuing.
Well, the initial reaction was laughter. And then I said, well, wait a minute here. And y'all think it's funny. I think it's funny too, sort of. But these are loans that we funded. These are loans that we wired the money on. I said, if you think it's funny, it's kind of funny, but it's not funny anymore. It's not funny anymore.
It wasn't funny because these are the kinds of loans that ended up being sold on Wall Street, the kinds of loans that are at the core of the financial meltdown. Did People's Choice withhold information about shaky subprime loans to the folks who bought those loans?
Yes.
Did you go to anybody?
I went to our general counsel.
And what happened?
And he felt that we had an obligation to disclose that fact.
And was that information disclosed?
Not that I'm aware of.
La Liberty says that as chief operating officer, setting underwriting guidelines was his responsibility. He says he tried to improve the system, but ran into resistance.
Here I thought I was fighting to keep a company viable, and yet I was perceived to be the guy that was trying to put us out of business.
In the end, La Liberty was fired. Remember, he was one of the company's top executives. And where's his boss, CEO Neil Cornsweet? The company, People's Choice Home Loan, went out of business. But today, Cornsweet lives in this oceanfront home in Southern California. Owns a private plane like this.
VHA utilizes the highest level of ethics and integrity in our auctions.
And works with a business, auctioning foreclosed properties. Cornsweet declined to be interviewed on camera, but told us he believes it's unfair to include People's Choice in this report, saying that his company had higher standards than most and that its loans performed better than average. He denied withholding information from Wall Street investors and denied that underwriters were unduly pressured by salespeople. He also said when senior executives learned of wrongdoing, they took action, firing about 30 employees for violating company policies and cutting off business ties with more than 100 unethical mortgage brokers. In statements to NBC, his spokesman said that People's Choice did everything it could to prevent abuse. He also said it bought back bad loans from Wall Street. We are confident that research will show that People's Choice is the antithesis of the poster child for abuse in subprime lending. According to this letter filed in the People's Choice bankruptcy case, Cornsweet is facing several legal claims, including one that he improperly withdrew more than $13 million of deferred compensation from a company trust. His spokesman says the allegations are untrue. As the nation struggles to recover, will any of the key players be held accountable, even go to jail? With so many involved and so much blame to go around, it could take years to sort out. But as Shakespeare suggested, the fault may not be in our stars, but in ourselves.
If we're honest with ourselves, we'll admit that for too long we have not always met these responsibilities, as a government or as a people. I say this not to lay blame or to look backwards, but because it is only by understanding how we arrived at this moment that we'll be able to lift ourselves out of this predicament.
Where does this leave the average American family?
Crashed and burned. Families are wiped out over this. We're bankrupting people who worked their whole economic lives. And we're saying, hey, this is how markets work.